Here's the lesson. In the world of single family or condos or townhouses or whatever, if your intended strategy or exit strategy is to flip it, fantastic. I've bought and sold over 500. I've rehabbed over 500 houses and flipped them. However, do not buy the property. Even with your intended exit strategy of to flip, don't do it unless you can cash flow it if you've got to rent it out.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
If you want money for real estate, Jay Conner is your guy. If you want to learn about getting money for real estate, Jay Conner's your guy. Jay, thanks for being here there, man.
Oh, my lands, thank you so much, my friend, for inviting me to come along, talk about my most passionate topic, that being private money, because ever since using private money all the way back to 2009, I've never missed out on a deal for not having the money. You know what's so funny? I've never asked for money, and I get all my deals funded without ever asking. I can't wait to talk about it.
Hold on. Tell me about that, first of all. You've never had to ask for money, but somehow money arrives. Tell me about that, and then tell me about you, Jay Conner.
Sure. Well, I've never asked for money, and here's the way it works. So from 2003 until 2009, all I knew to do was to go to the local bank, apply for the mortgage, have a line of credit, traditional financing, right? Pull my skirt up so the banker can see my personal assets, give me a colonoscopy, pull my credit. You know, that's all I knew to do. But, you know, everything changed in January 2009. I called up my banker, had 2 houses under contract to purchase. I learned my line of credit had been closed with no notice whatsoever. And, of course, that's because the financial crisis, the global financial crisis was going on. So that's when I learned about private money. And so when I learned about private money, and I'm not talking hard money, I'm not talking institutional money, which, by the way, I say establish as many relationships as you can with as many people. Some of my best friends on this planet are hard money lenders. They use my techniques to raise money for their fund. But anyway, establish as many relationships as you can. But when I'm talking private money, I'm talking about doing business with individuals, human beings just like you, just like me, that loan money to us real estate investors, either from their investment capital and or their retirement funds. So when I was cut off from the bank, here's what I decided to do. How am I going to attract money? No chasing, no begging, no selling, no persuading. How am I going to attract the funding without ever having to ask for money? And here's the deal. One of the most common comments I get from new real estate investors is they'll say, Jay, I got a fear of rejection.
Mm-hmm.
Well, here's my question. How can you be rejected if you never ask anybody for anything? So let me pull the curtain back. Let me reveal how to get your deals funded. Now, I'm talking in the world of single family. It's a little different in multifamily, right? But in the world of single family houses, here's how to get your deals funded without ever asking for money. The secret is here. You separate the conversations with a potential private lender, which, by the way, I got 47 private lenders right now, and not one of them had ever heard of private money or private lending until I did what? Until I put on my teacher hat. My teacher hat says private money teacher, right? All 47 of them never heard of private money or private lending until I told them about it and told them about it. So here's the secret. We separate conversations. This is critical to understand. Separate conversations between exposing the opportunity, teaching someone what this world of private money is all about, how they can earn high rates of return on their investment capital and or their retirement funds safely and securely, expose them to this world that they've never heard of before, and have no deal attached to it. Mm-hmm. You've got the opportunity. You got the program. Here's how the program works. So you teach it, And then they let you know how much they want to invest, etc. Is it in retirement funds? Do you need to introduce them to your self-directed IRA representative for them to move funds over, etc.? So they're just, first of all, excited about the program. They tell you how much they got to work with. So that's first. That's first. And of course, there's a whole conversation about how do you find these people and how do you teach it to them and all that. Is it one-on-one conversations? Is it in a group? We can talk about that, but keeping it simple. So first we're going to teach it, expose this opportunity, teach them the interest rate. It's going to be the same interest rate no matter the deal, the interest rate, the loan to value, the length of the note, the frequency of payments, how they can get their money back in case of an emergency, etc.
Okay.
They're excited about the program. So now here's the script. They tell me how much they've got to invest and they can't wait to get involved. And then I tell them I will put your money to work for you just as soon as possible. Now, let's assume that you are one of my new private lenders.
Okay.
Let's say we go to church together.
Okay.
And we had gone to Starbucks and we're talking along, and I had said, by the way, did you know there's a way that people can earn unlimited money per year tax-free? And, of course, you didn't know the answer to that. So we talked about self-directed IRAs and how that works. Well, in the conversation, I learned that you have got $150,000 in retirement funds somewhere.
Okay.
Maybe you had it in Schwab, Morgan Stanley, previous 401k, whatever. And so I introduced you to my self-directed IRA representative that I recommend. And let's assume you've moved your $150,000 over to the self-directed IRA company. You've got your account established. You're ready to go. You are waiting for what I call the good news phone call. The good news phone call. All right. So I pick up the phone. You know, it's hard to believe, folks, but we actually still have handsets and cords, you know, here in Morehead City, North Carolina. But anyway, so I pick up the phone. I call you. You answer the phone. We have a little chit chat. Excuse me. Now here's the script. Here's the exact script as to what I say to you, my new private lender, without asking you for any money. Here's the script. You pick up the phone. I say, I've got great news for you. I can now put your money to work. I've got a house in Newport under contract with an after-repaired value of $200,000. Now, the funding required is $150,000 for the deal, which matches up to what you have. Closing is going to be next Tuesday, so you'll need to have your funds wired to my real estate attorney's trust account by next Monday. I'm going to have my attorney email you the wiring instructions. That's the end of the conversation. I mean, the most stupid thing I could say is, do you want to fund the deal? Well, of course you want to fund the deal. For a variety of reasons. Number one, you moved your funds over at my recommendation to the retirement, to the self-directed IRA company. And my recommendation is sitting there. It's not earning you any money until I put it to work. And I promised you I'd put it to work. Secondly, I'm not going to bring a deal for you to fund unless it matches the criteria of what I already taught you. Notice when I said, let's unpack what I said. Notice I said, I've got a house under contract with an after-repaired value of $200,000. Then I said, the funding required for the deal is $150,000. Now, let's unpack that. I already taught you, as my new private lender, I'm not going to borrow more than 75% of the after-repaired value. So in my script, when I called you up with the good news phone call, I said, I got great news for you. I can now put your money to work. I got a house under contract with an after repair. There's the key word. With an after repaired value of $200,000. The funding required for the deal is $150,000. I already know that matches up to what you moved over. And then here we go. So you see, when you do it this way and you separate the conversations, I am morally and ethically bound to put your money to work and to borrow your money, because I promised you I would. I exposed you to this opportunity. And here's another reason we separate the conversations, and I never have to ask for money. Here's a writer-downer. Desperation has got a smell to it. And if I had shared with you the opportunity, the property lending program, and you never heard that before, and I got a deal for you to fund in the initial conversation, I already sound like I'm desperate without even trying to, because when I'm talking the program, the opportunity, and a deal, in essence, I'm saying, I really need you to fund this deal, right? So it's all about positioning, no chasing, no begging, no selling, no persuading. It's all about leading with a servant's heart, truly. Because here's the deal. There's more money available than there are deals. Literally, there's more money. And so, this whole mind shift, the traditional way to borrow money from the local bank or a hard money lender, any kind of institutional money, is the lender makes the rules. That's all we know.
That is 100% true, without a doubt.
The lender makes the rules, but change your thinking. In this world, the lender does not make the rules. We make the rules. We set the interest rate. We set the terms. Now, this only works, bear in mind, this only works if you are teaching people that have never been exposed to this world. Obviously, if I'm talking to, let's say I'm at a networking event, Zoom, in person, whatever. Let's say I'm at a networking event at a self-directed IRA company.
Okay.
Well, 70% of those people, actually more than 70% of those people that have accounts want to loan you money. They want to loan you money. They want to be a passive real estate investor by loaning money from their self-directed IRA companies. But guess what? Guess what? I'm not putting on my teacher hat.
Yeah.
They already know, right? So what does that conversation look like? That conversation is a negotiation conversation, or it's a conversation to where that private lender has already been loaning money out. So guess what?
Mm-hmm.
They know what they want. They know what their terms are. In their mind, they are making the rules, right? Like here's what I get. I get points. Here's my rate. Blah 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 blah. Take it or leave it. But in this world of being a teacher, you see, 99% of the people walking around never heard of a self-directed IRA in their life.
100%, yeah, which is surprising, but yeah.
They never heard it. And you come along and you have this conversation, and they're going, whoa, what in the world? I never heard of this. And so now here you are, the expert, offering an opportunity to people that never heard of this kind of opportunity. So it changes the dynamic 180%. In Kentucky, they call it a 360. It's not a 360. It's a 180, right? So it changes the dynamic opposite direction. We make the rules. We're offering an opportunity. There's no applications. Hello, there's no applications. You're already approved because you are your own, wrap your mind around this, you as the borrower, you are your own underwriter. You underwrite your own deals.
So if you really think about it, you really are a teacher. I mean, the hat displays that, but really you are a teacher of the whole process. You've been doing it for a while. I mean, yeah, by the way, we have a surprise at the end of this. We're going to unveil that in just a little bit, but you really are a teacher. I mean, obviously you've got a good reputation. You've been doing it for a while, but in essence, that's really what you are.
Absolutely. And that's my mindset. I mean, I didn't get this when I started doing this way back in 2009, but it didn't take long for my wife, Carol Joy, and I to start receiving, listen, handwritten notes in the mail, for goodness sakes, from our private lenders thanking us for changing their retirement years. I'm thinking of Wayne and Francis. They're passed away now. They were one of our very first private lenders, And I put on my teacher hat, taught them, and they started with $500,000. And they referred a lot of people to us. But, we learned, so this was a wake-up call. This was a light bulb moment. When we got that handwritten note thanking us for changing their retirement years, I went, wow. They went on to tell us that they could travel and see their grandkids anytime they wanted to, and they couldn't do that before we came along with our program because, you see, they were losing money in the stock market at the time that I talked to them about it. And, by the way, how I approached them is an interesting story. But they were losing money in the stock market. They were only making 3% in the local certificate of deposit. So their principal investment amount was dwindling away. And when they liquidated their stocks and invested with us and liquidated their certificate of deposits and invested with us, they got a reliable 8%. It was like, I mean, they earned $40,000 a year by investing with us. And they didn't, and they weren't earning $40,000 a year. That's 8% of 500,000. They weren't earning $40,000 a year. They were earning Social Security and a little bit of retirement, you know? So, you know, when you have that mindset of you really want to make an impact, make a difference, and create win-win scenarios and really serve these people that haven't even heard of this opportunity, it's just a wonderful feeling.
It really is an opportunity. I mean, again, it blows me away that people are looking at 3% rates of return or whatever in certificates of deposit CDs when there's so many things out there. And I mean, thank goodness people like you are out there, but it's hard to get the word out when some advisors are saying, oh, put money in a CD when you could be putting money into, you know, deals like what you're talking about. They're hopefully a little bit safer. And then hopefully you're going to have a better rate of return even. That's neither here nor there. So tell me a little bit about yourself, by the way. I want to know a little bit about yourself because obviously I know you have a good background. I think some of the listeners and viewers might not know who Jay Conner is, but go ahead and tell us a little bit about your background real quick.
Sure. Well, Carol Joy and I started investing in single-family houses here in eastern North Carolina, real small market, only 40,000 people. Started out with 40,000 people, still got 40,000 people. And so we started out in 2003 here in our little local area. And from 2003 to 2009, all I knew to do was to go to the local bank.
Mm-hmm.
I never even heard of hard money lenders.
Mm-hmm.
That's all I knew. And so when I lost my line of credit in January of 2009, then that's when we started using private money. So we do 2 or 3 transactions a month, not high volume, but our average profits right now are $86,000 per single family house flip.
Deal. Holy, okay. Wow. We're talking good money. I like that.
Per deal. I don't say that, by the way, to brag or come from a position of ego. I say that to make a point. And my point is there's a very, very strong argument to be made to dominate a small market, be a big fish in a small pond, versus trying to invest in the big cities, and you're competing with all those other real estate investors. I get most of my leads from pay per lead on Google. I've got 5 different vendors. I'm paying on the average $200 per lead, and I need to pay.
Now, hold on. You mean right now you are?
Yeah, right now, $200 per lead. And depending on the vendor, it takes 10 to 15 leads to close a deal and purchase a house. So I'm investing between $2,000 and $3,000 in marketing to close on a deal. But here's the question. How many $3,000 would you pay to get $86,000 back?
Trade-off is there for you. I get you. Okay. Thank you for relinquishing that information.
Be it said, I relinquished my secret.
I understand. Wow. There's actually a marketing. I mean, and we could ask you questions about marketing too. But anyway, thank you for giving us a little bit of background. So then what else? How about one tip as far as, besides what you've already given me, give me one tip as far as looking at a deal that you think makes sense that can make me, I don't know, that much richer.
Well, let me share with your audience what not to do.
That's a tough question, by the way.
Because I made a huge mistake. And this was prior to private money. This was when I had a line of credit at the bank. There was this condominium, oceanfront condominium over here at Atlantic Beach. I'd only been in the business for a couple of years. And so it was a foreclosure being sold at the courthouse steps. Here's the big mistake. I ran the numbers with the intention of flipping the condo, oceanfront condo. And that's the offer I made with my intended exit strategy to flip it and sell it. Here's the big mistake. I didn't run the numbers as to whether it would cash flow if I had to hold it.
Mm.
Well, this condominium could only get income 13 weeks out of the year. June, July, or May, June, July, August, first weekend in September. So by the time I bought it, renovated it, rehabbed it, put it on the market, accelerated the price, the market started coming down. Market started coming down quickly. Now, bear in mind, this was 2004, 2005. Now, we weren't into the crash of 2007, 8, 9, but still, yeah, the prices were starting to come down. So, being very stubborn and stupid and idiotic, I sat on my price and wouldn't reduce my price. As other prices are coming down, as other sold comps are coming down, I mean, I was like an ostrich with my tail in the air and my head in the sand. So by the time I woke up and said, hey, I got to reduce the price, I couldn't sell it for what I owed. So guess what I had to do? I had to stop the bleeding. I had those carrying costs. I mean, this was a $350,000 condominium. And so what I had to do, I put it on the rental market. So for a number of years, it was a bloodbath, losing money every year based on what I could bring in versus what the underlying debt was. So what's the lesson? Here's the lesson. In the world of single family or condos or townhouses or whatever, if your intended strategy or exit strategy is to flip it, fantastic. I've bought and sold I've rehabbed over 500 houses and flipped them. However, do not buy the property, even with your intended exit strategy of to flip. Don't do it unless you can cash flow it if you've got to rent it out.
Your plan B. That's a really, really good point. That's hugely impactful to people out there that it should be, because sometimes deals don't go as they are planned, and so you need a good plan.
Absolutely. Yeah. And look, Murphy shows up in every house, and you all know who Murphy is, right? Murphy shows up. And so, I mean, that triggers a whole nother conversation that we don't have time for in this show because we're talking about private money. But that triggers a whole nother conversation about how in the world are you really, really sure of what the maximum offer should be if you're paying all cash, right? Well, the good news is in my book, Where to Get the Money Now, I got you covered to where you don't make that mistake of paying too much.
Yeah, let's talk about that, because, we're getting ready to close the door on this episode, which is sad because there's so much information you have. But, I said there was going to be a surprise at the end. Why don't you go ahead and mention what the surprise is and how to get that surprise?
Absolutely. Well, I'm so excited to talk about for a moment my book, my best-selling book, which is called Where to Get the Money Now, subtitle, How and Where to Get Money for Your Real Estate Deals Without Ever Relying on Traditional, Institutional, or Hard Money Lenders. This is not an ebook. This is actually a book. And I know you may be surprised to know the United States Postal Service is still in business. So I will actually 3-day express this book to you. Now, if you're listening to this show, this book will unpack private money for you. And the book is $20 on Amazon. Don't spend $20 on Amazon. The book is free because you're here listening to the show, just covers shipping and handling. And you can pick up my book. I'll autograph it for you, rush it to you at jconnor, and I'm an ER, not OR, jconnor.com/book. Again, that's JAYCONNER.com/book. jconnor.com/book.
Well, very nice. I mean, that's a huge benefit. $20 right off the bat. And not only is it worth $20, it's worth a lot more because of it looks like you spilled out all your secrets as far as increasing net worth based on some of the philosophies that you.
Absolutely.
So even separate from that, although that's awesome, but how does someone get a hold of you if they're interested in whatever, the whole concept of private money lending?
Well, believe it or not, I like to talk to people. So why don't we just give them my phone number, for goodness sakes, right?
Okay.
252-808-2927. Yes, I may be opening up Pandora's box. I get it. But we actually pick up the phone, when you call 252-808-2927. And you can just go to my website, jconnor.com. You can email me from there if you'd rather email than talk to me.
Got it. And again, it's ER, not OR.
Yeah. ER.
Yeah. All right. So how about this? In closing, what's one thing we haven't talked about you think can add value to people who, are interested in private money lending, or talking to you, or being the private money lender, or learning more about private money lending? What's one thing, one little tidbit that you think will add value?
Well, I'm not going to give you one little tidbit. I'm going to give you one big rock.
Okay. Like it.
In fact, this is one big gold rock, not a nugget. And that is, don't make the other mistake that I made, which was starting out in this business by yourself. The first 6 years I was out here on an island by myself, wasting and losing hundreds of thousands of dollars in money and crazy stuff. So join hips with somebody either in your local RIA that knows what they're doing. Join hips with, I don't know, Ken, or I don't know if you're helping people or not, but join hips with somebody that knows the ropes, that have made the mistakes, that can hold your hand. For goodness sakes, get a mentor or coach.
No, without a doubt. Because as an example, by the way, you're not paid for this. I'm not paid for this. We're doing this as a benefit to listeners and viewers out there. But what I would say is, why try to go it on your own? Why take years trying to learn investment philosophy? Bend the ear, join hips, as you say, with someone like you, and then that'll cut down the learning experience, the cost that it takes to learn from whomever, all the losses that you're undergoing because you haven't figured it out yourself. And then who knows, maybe you're going to increase your net worth by attaching hips to someone like you.
That's it. That's it.
I like it. Wow. I really appreciate you taking the time. Actually, the same thing for all the people who are out there listening and watching this. Hopefully you've had some true value that's been provided by Jay Conner, with ER, by the way. But I think this has been a great learning experience. I love talking to you. I've seen you in action. I know people who have said good things about you. We have some clients in common who I know have said good things about you. I think they should definitely go to your website and get that free book. I really appreciate you extending that nicety to all our people out there. Well, anyway, once again, this is Kenneth French of VastSolutionsGroup.com. You're listening and watching Vast Voices, telling business secrets to entrepreneurs. Thanks, everybody.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.